Oh wait, I'm not sharing. What screen am I sharing? Okay, now I'm going live. I think they could hear us, but I'm not sharing the good screen.
Okay, well I've got the live chat up on the screen here, so we'll see.
Hold on, I have to change my screen. Zoom meeting. Okay. All right. Okay, now I believe they see.
Yeah, that's it. We're all going, Patrick.
Okay, cool. Am I early? Could be early. Doesn't matter.
It's around about 5 o'clock here in the UK. So, what time is it for you, Patrick?
It's noon.
Noon. There you go. We're 5 hours. 5 hours ahead. It's starting to show signs of getting dark here in the UK. Okay, so are we ready to go?
All right. Let's do it. Okay, guys. We're seeing Northstar screen. He did a little pre-work there, going through that insane list there that kind of opened a crazy rabbit hole there by asking you guys to put the tickers. But he still did an effort. He went to grab some. He did some lines, but they could have disappeared, so you might have to redo some of the lines live. But I think it's always good practice to don't be scared of losing your lines on your charts. You redo them. You see them sometimes a little bit different. You miss something. So it's always good to practice. So since there's a lot of charts to do, I'm going to let Northstar kick it off. And so we're going to go through his list, what he grabbed, and whatever he didn't grab in his list. The guys that showed up for the live stream, I think we're going to prioritize you, and we're going to grab your tickers, and I'm going to do them after that on my side. And if ever there's some left over, and there's time, we'll keep digging through that list on Twitter. All right.
It's a long list, isn't it? It's a very long list.
It's insane. Next time, I'm going to prepare better. That I'm going to take that list and try to do some analytics on to see which ones show up most often. But at the same time, sometimes there's occult, unknown miners. Could be A++ setups, and because they're not popular, they're probably actually a good contrarian entry to get in. So, all right, let's try to find these good charts.
We'll go through these charts. I'll put some lines on them, and we'll discuss them together. Just before we start that, though, I've happened to have the Bitcoin chart on my screen. I know it's not anything that anybody requested, but it's just a reminder that you always have to be constantly sort of looking at reality. As a weather forecaster, I'll give a forecast, and it might be a dry day with a 10% chance of rain. But if we start getting a lot of rain being reported and it's pouring down outside of the window here, you can't just stick with your forecast and say, yes, there's a 90% chance of dry weather and 10% chance of rain. If the probabilities change, the probabilities change, and you have to keep up with the reality. Bitcoin, here's a chart I've been sort of posting on and off on Twitter, and the arc had been quite clearly identified, and we'd had a couple of good bounces off the arc here. The March lows, and it was the same with a lot of the precious metals charts, created an anomalous spike downwards, and there's the question mark over whether you draw the arc to the close on the candle, or whether you take the spike into account. And the spike low does create an element of doubt, and Bitcoin has broken down out of the arc and is testing the upper resistance line at the moment. So far, that's all it is, and if price reverses through the remainder of the month and turns upwards back into the arc, then you're just going to be left with a wick on the candle, and price quite happily carries on moving $1,000, which is exactly what the plan was. But if we start to see the price drop a little bit lower, then we could be dropping to one of these other support and resistance lines, well, support lines now, but still within the larger arc, which is drawn to that wick. So you have to be, the whole point of saying that is just basically that you have to be constantly monitoring what's going on in the real world. So the first one of the requests here was Paramount Gold, and I was just having a quick look at this. I was chatting to Patrick a few minutes ago. By the way, I know nothing about, or very little about any of these companies. A lot of them are fairly new to me, and they're sort of small cap explorers, and very interesting charts. So I'm not going to be commenting on the fundamentals. This is all pure chart analysis, and hopefully give you a little bit of an insight into just the process that goes on behind sort of trying to define breakout levels, support and resistance, and all that kind of thing. So with Paramount Gold, we've got a a fairly clear and well-defined resistance line here, turned support, but it was resistance. And chatting to Patrick earlier on and discussing about how we place these support and resistance lines, and you could try and start the line back up here somewhere, but by doing that, it's pretty much impossible to get a very good sort of resistance line on there. Price action just isn't sort of following that line wherever you put it. You know, you can sort of balance it on one of the candles or a couple of the candles, but price action is just oscillating backwards and forwards through the line. So you have to take a step back, and I do this by eye. You know, I don't find it that difficult because I can sort of see just by looking at the chart, without the line being there, that it's highly likely that, you know, by sort of readjusting the line, you can find, you know, a resistance line there that is much better and fits the price action. So this spike here was what I would call an anomalous spike, a little bit like the March lows. You know, some sort of real rapid excess in sentiment has pushed that candle all the way up there, but things settle down and you get a more orderly sort of price action. And with the resistance line here, you can see that price has tested it on several occasions here and here, a couple of occasions here, and then we've seen the breakout sort of occurring, which was back here in sort of late April this year. And since then we've had a back test and we've seen price oscillating, forming sometimes sort of referred to as a megaphone pattern. Now these can break out to the upside or to the downside, but bearing in mind that we're in a precious metals bull market as defined by the 8 and 16-year gold cycle, then the breakouts invariably take place to the upside. When you get downside breakouts, they tend to be sort of shaking out weak hands and sort of reverse pretty rapidly back to the upside. Looking at the indicators, the stochastic is coming back nicely now. We've had a bearish cross on the moving average convergence divergence indicator with the signal line suggesting further sort of weakness in the near future. So what I suspect is going to happen here is the price is just going to sort of slide a little bit further down here on the support line before sort of breaking to the upside. This sort of ties in with a little bit more expected weakness in the gold and silver market before we see more solid upside breakout. So this particular chart, if I'd sort of bought before the breakout, I'd be holding, quite happy to hold through this consolidation period. If I was looking to sort of enter this particular stock, I'd hold fire for a little while, just let price come back down. It looks as though it wants to retest the support line around about $1, so maybe get another 10% discount on where the current price is at the moment. What do you think about that, Patrick? Is there anything you want to add to that?
Well, I think, yeah, so that's like part of the patterns there that we keep seeing over and over. See, like even the next chart, you'll see that they're evolving at different rates, these minor charts, but the pattern is declining trend line, breakout above, and then retest of that pivot line, that I call that paradigm shift trend line. And once that retest is successful, then when everybody's scared, they think it's going to crash back down, those are actually another great entry to get in there, especially in when the weight of evidence is we're in a precious bull market. The odds of these bouncing back up off that retest of that descending trend line are higher. So yeah, I actually like those.
Got Falco Resources on here, and the support lines are interesting as well over long periods of time. These are log charts, by the way, rather than linear charts, and the reason for that is that over long periods of time, price action tends to sort of follow a log pattern. You know, the price rises tend to take place sort of obeying logarithmic rules, if you want to put it that way. I mean, gold and silver will sort of rise at a logarithmic fashion over the coming years, purely because the monetary base has sort of been doing the same. You know, the fiat currency that we measure gold and silver in has been sort of created out of thin air at a logarithmic rate. But if you're looking over shorter time periods, then the linear chart is also worth looking at. This one is only going back to 2016, so it's not sort of over a 10-year period. So you can readjust the lines, and they're sort of confirming much the same thing on the linear chart as well, or the arithmetic chart, if you want to call it that. And so we've had a breakout. You can see that quite clearly here. It's a good buying point. Again, a confirmed breakout and then coming back to test the breakout is, a traditionally great place to sort of buy into a stock. So it tends to be a low risk entry point. Also, a low risk entry point is when you're bouncing off the support line anywhere close to the 16-year cycle low in the commodity, in commodities, whether gold, silver, or copper, or whatever it is. We've sort of seen the commodities cycle low during this time period here. So you could have bought anywhere in the last sort of year or so. It would have been a bit boring because the price has been going sideways and quite frustrating. But as a longer term investor, buying any time sort of here, when you're looking at the price going all the way up here, is a great thing to do. So I'd call it an accumulation zone as you start to bottom, and it's Stan Weinstein's stage analysis, stage one sort of basing this whole sort of period here. I mean, it's a safer place to sort of buy in once you get the confirmed breakout. So I wouldn't necessarily recommend buying in quantities here. All sorts of odd things can happen with these small companies. It's major cyclical lows that can go bust and completely go out of existence. So you can find your investment wiped out completely. But the companies that survive the long extended sort of low commodity prices, the ones that did get through this period and are successful with good management teams and are well run and well funded and well resourced, then they will see multiple increases in share value. So this one looks like a good one as well. We're just looking like we might be seeing a stochastic, a turn in the stochastic here as well, so that's worth keeping an eye on. The TRIX indicator is above zero, which is a bullish place to be. You can see what happened back here when we were above zero and rising. If the TRIX indicator and the MACD indicator is rising and the stochastic is in the high zone, then it's supportive of rapid price increases. So the stochastic indicator is in the right sort of area. It's sort of there or thereabouts for the high zone. If we get a bullish cross sort of in the MACD sometime in the next sort of few weeks, and the TRIX continues its general sort of direction, then great, looks like a good one for me. So it's a buy, it's a hold, it's one to add to, I think. Patrick?
Yeah, exactly. I'm looking at it there, and on the stock, even I starting to see some hidden bullish divergence. It's doing a lower low on the stock, but the price action refusing to go lower. The TRIX, still has a lot of up room. So of course, this could probably maybe dip a little bit, but you're in a lower risk area and a higher reward entry right now than buying at close to 60, 62. So right now, like in a bull market, like Kevin says there, this one looks to be at a good buying area there. Yeah,
and you can see, the last time we saw a very rapid price appreciation, the stochastic sort of rose, and when it reached a high level, it stayed there for a period of time as well. So what I'm expecting generally with a lot of these stocks is for a very rapid price acceleration back towards these sort of levels back here, assuming there haven't been any stock splits, which on this one there hasn't. I've got the charts set so that if there has been stock splits, it shows it at the bottom. So we might see that on one or two of them, but there's nothing from that point of view that's likely to be holding price back. So there's no particular reason to think that we can't get back to these sort of levels before the sort of drop into the 8-year cycle low. That's going to set a lot of these stocks back again, no doubt. And then you get the sort of the sort of culmination of the bull market taking place after 2023, and as we move through the mid and late 2020s, and then that's where these things really start to take off. So these moves at the moment are just a preparation for what's coming later on in the decade. So moving on to the next one, we've got Inv Metals, and again a very similar pattern. It's incredible, isn't it, when you start looking at these, just how many of them are behaving in much the same way. This is a linear chart rather than the log chart because it's only going back a couple of years. And price is just bouncing off that support line. So it's been all the way up to $1.10. It's come back to 50 cents. So you're getting a 50% discount here. So if you bought before the breakout, great. Even if you bought up here somewhere, I wouldn't be particularly tempted to, well, certainly at this price here now, I wouldn't be tempted to sell any of my holdings. It's at a point where the likelihood is the price is going to start turning up. So why would you sell here when, a few weeks down the line the price is going to be back up here? So it's a low risk entry. We see the stochastic is even further into the into this sort of low zone here, where we may get a few weeks where price continues to slide down, and the stochastic stays in this. I don't like calling it an oversold zone. It's just a sort of a low reading on the stochastic before it begins to turn up and gets back into the high zone, where you see these sort of rapid price moves like you saw back here in 2016. The MACD has had a bear cross, which is what you'd expect with a stochastic coming down, but in a bull market, you don't necessarily expect to see these indicators coming all the way back down into the low zone. If this one's about to turn, then it means that this MACD indicator may well do what it did back here and just come back a little bit, cool off, get back perhaps towards zero, but then stay above zero and turn as it did back here in 2016. So don't expect every time it goes to a high level that it's automatically going to come all the way back down here to a very low level. That's not what you would want to see in a bull market. The tricks indicators picking up nicely as well. Yeah.
So for that turnaround right now, what is the first clue maybe we'd look at? Would you wait for like a weekly green candle on that descending trend line as a early clue, like just in case you want to see like you want the chart to prove to you that it actually wants to bounce off that line, right?
Yeah, well,
or has it done it already?
Yeah, you can. One thing that I do is I go down to the smaller time scales and look at the 6-month chart, for example. On TradingView, it's very good here. You can just sort of flick between 1 month, 3 month, 1 year views. And here we are on the 6 monthly chart, and it's basically you're just zooming in on the price action. On this view here, you hover over the candles and you can see that each candle is an individual day. So this is a daily chart covering a 6-month period. Each one of these candles is a day. So sorry,
2-hour chart. No?
Let me just have a look at the candles. Well, each candle. Let me just check. Yeah, each candle there is 1 day, isn't it? That's the 10th of August.
So weird.
That's the 11th, the 12th.
Because on the top left it says 2 hours.
Yeah. It does, doesn't it? Yeah. That's a 2. So why does each one of those candles show 1 day? No, I think you must be right. That must be a 2-hourly chart. I'm not too sure why that's 10th of July, 9th of July. 9th. Yeah, you're right. That's a 2-hourly chart, isn't it? But the point I'm making is, just put that back to a 1 year chart. Yeah, that's a daily. So on the 1 year chart, you've got daily. So each one of these candles on it. Well, I mean, I think we're probably talking at cross purposes, Patrick. So what I'm talking about is how much of a time period each one of these candles represents. So on this particular chart, it's got daily on the top there, and you can hover over each candle to see that it covers the period from. So that's the 18th of August there. That's the 19th. That's the 20th, the 21st, the 24th. So each one of those, 24th, 26th, 27th, 28th. So each one of those is a day, isn't it, Patrick?
Yeah.
Yeah. So all I'm trying to sort of clarify is how much of a time period each one of those candles represents, and the way that these sort of indicators behave in relation to the candles of that time period. So if you go down to the 6 monthly chart, it shows a time period of 6 months, and the indicators will then react more sort of frequently to the price action. So you'll get these oscillations up and down over a shorter time scale. So whereas on the chart that shows 1 year or 5 years, the stochastic, the MACD and the TRIX will move over much longer time periods, and they'll oscillate over a period of weeks and months. By going to the 6 monthly chart, the sort of oscillators, the technical indicators, will move over a period of days. So you can just visually see, looking at the chart there, that when you hit a low point with the stochastic indicator, price action sort of bottoms out, and you're getting to the point now where the stochastic indicator has sort of reached just about as low as it can possibly go. Of course, it can sort of stay in that low zone for a period of a few days, but in a bull market, it tends not to stay down at that level for very long. So the price is highly likely to sort of bounce off that line. It's giving you additional confirmation. Going back to your question earlier on, when you're sort of looking at sort of indicators to sort of show you, indicators to show you on smaller time frames just when you can expect the price action to start reversing. You start looking down on a 1 month chart, and you're getting these oscillations taking place almost on a sort of an hourly basis. So this is showing a time period of 1 month, and you're getting the oscillations on a much quicker sort of time frame. So I hope that makes some kind of sense. You can see, the point being that you have to correlate the crossovers, the bullish crossovers on the indicators with what's happening with price action above. So you can see on the 1 month chart, the MACD sort of signal is given when the blue line crosses the orange line there, and then price reacts upwards. The opposite is the case when the blue line starts to move below the orange line, the price sort of continuing in a downtrend. So what's happening at the moment is that the lines are sort of becoming parallel, and you can expect a sort of an uptick in the blue line to sort of cross back over the orange line sometime over here, and price moves back upwards. So all of that put together is evidence from my sort of point of view, is that it supports that the fact that this sort of black support line is highly likely to hold support and support the price going forwards. So I wouldn't see any reason to sort of sell my position in that stock. You got any other particular comments on that, Patrick?
No. For me, sometimes that's it. Drilling down on the smaller time frames helps you see like the early turning signs, and after that could like cascade on the higher time frames, and then you get that momentum there that is going to keep driving it upwards. Sure.
Yeah. So this is a monthly chart. So each one of these candles is a month here, and this is a non-log chart, and you can see sometimes when you put a non-log chart up, if the price action has been very logarithmic in nature, you've been all the way up here at sort of 80 cents and it's dropped down close to zero. That's a sort of logarithmic descent in price. So by putting the logarithmic chart on, it starts to make a lot more sense, and you can start to sort of see where the support and resistance lines are. With this particular one, Caravel Minerals, putting the resistance line on, looks to me as though we've had a breakout. Well, again, it's a question of where you put the line and where you feel that you've got maximum confirmation of the resistance line, now support line. I think if you put it right on the very top here, it's quite difficult to get multiple touches on any resistance line, so you're not really getting any confirmation of resistance. So again, I think that very high value there is sort of I don't know really how to describe it. Sort of, it's kind of an unrealistic price level that hasn't been sort of taken into account since. This is how price takes into account a support and resistance line, and whether it respects it or whether it doesn't. So all you're trying to do is place a line on the chart so the price is respecting that line, and then it basically means something. You can put lines on charts all over the place, and they don't really mean anything if the price action isn't confirming your placing of the support and resistance lines. So we've had a breakout. If you put the lines somewhere in that sort of general area, and you can place the line on the wick, of the candle. If you're new to all of this, by the way, the wick is just the extension of price on an intra-month basis. This is a monthly chart, so each candle is a month. The top of the wick is the highest that price has reached during the month, and then the price closes back down at the top of the candle. So the candle shows, the price range with the extreme down to the very bottom. So what you're looking at with the wicks is the highest point that the price has reached during that monthly period before price closes back down on the candle. So you can place the line on the wick, and that does give some confirmation of the line because price has reversed at that point. But you'll notice that sometimes when you're placing the line, it's sort of on top of the top of the candle. You don't want to be placing the line somewhere through the middle of the candle, because that's just the sort of range of prices during that sort of monthly period. You want to be placing it on the top of the candle, which is where price closes. So that's there you go.
That one's not bad. I know sometimes, like, even that's probably how I would have. This it was a breakout and then some type of retest, and it overlapped a little bit that trend line, and then it continued upwards.
And it looks to me as though I probably wouldn't be buying this one at the moment. It hasn't come back to retest the breakout like the other ones has, and it's looking as though the stochastic is starting to level off. And you can see what sort of happened last time when that happened. You get the bearish cross, and then price came all the way back down from sort of 80 or 90 cents down to about 40 cents. So my sense is that the price on this one is likely to come back down, test the breakout somewhere around 30.
I had a shorter term time line there that I drew. So from those 2019, so from 2009. Okay, you moved on. Where's that?
Yeah, no, it's okay. I'll go back. I'll go back to the 5-year view.
And there's a force majeure from the chat there. He's wondering, for the UK, have you ever used IG markets to trade in the UK? He's looking for a platform for beginners.
Yeah, IG I've used. There's Interactive Investor, and probably the best one is Hargreaves Lansdowne. Oh, you got some stock splits on this one. Sorry, had I moved on? Well, we were looking at INV a moment ago. I didn't see that chart move over. So we'll look at Caravel. That's the one we're looking at. So there's some stock splits on there as well, which is worth taking into account with these things. But I had a trend line from where the 2019 January. I started it there, and then I went to the right. Well, even shorter. Like the long term one's pretty good, but on the short term, and I put it more horizontally. So it went 2019, and then that low high, and then the actual breakout was that green candle, like that there, sideways, more like horizontal. I'm trying to move the lines. There's a bit
there
of a
you
lag
go. And we actually had a breakout last month.
Yeah, and horizontal support and resistance levels are important. It's all very well looking at the long-term breakout, but when you have broken out, you're then looking at where are we likely to see price advance to, and there are various ways of doing that. Various measured moves from bull flags, for example, and from arcs. I'm sorry, this is looking a little bit. The line is sort of juddering around a little bit because there's quite a lot of lag on the chart. But there you go. So what I'm trying to do is to sort of indicate some horizontal areas where you might start to see some support and resistance levels. I need to bring that line down a little bit, somewhere in here, and you see anywhere in that sort of zone there, around 70 or 80. So we've had a breakout. We've seen the price already test that sort of zone around 70 or 80, and it's just backed off a little bit. And the next one is going to be up here at around about 12, isn't it? So that's 8 cents. So up around 12, and then the next one up here around about 17. And you can sort of visualize where these horizontal support and resistance lines are. When they reach them, the price tends to back off unless you're in the middle of a very strong move, and in which case the price will slice straight through. But very often the price will just back off for a period of time. And if you look at the chart on a smaller time scale of a few months, you can see that sort of price action as the backing off takes place. There you go. You can see what's happening here. Price has hit the resistance line. It's backed off. It's sort of tried again, and you could probably say it's forming a little bit of a flag here, possibly as well. There's a flagpole there, and possibly a little bit of a flag. Perhaps it's building energy to try and break out. But yeah. Okay, I've got the same stock on there twice for some reason. So yeah. That question you're asking earlier on Hargreaves Lansdowne is a good one. You can download the app and you just transfer funds into the account, and it gives you access to obviously buy and sell shares. If you're trading on the US and Canadian exchanges, there's a little bit of paperwork that you need to get through first. I can't recall if it's online or whether they actually send you the paperwork through the post, but it's something that you have to do. It doesn't take very long. You just sign some documents, and it just basically confirms your identity, your status, and then you're allowed to freely trade stocks on TSX, for example. Canadian Stock Exchange or whatever it happens to be. A lot of these are traded on the Canadian Stock Exchange. So we've got Pacifico Minerals. So I'll go to the full view. See what the chart looks like. Down nearly 10%. It wasn't a good day, was it? But you know, these things are very volatile, so you have to realise that when you're getting into them.
Exactly.
And that 10% drop barely even shows on here, does it? So
that's why I always go on the higher time frames to reduce the noise. What looks like, and then you get like this picture from. It doesn't look too bad there. It just looks like it's going to try to retrace to a breakout line there that you're probably going to draw very soon.
Well, I'm trying to draw a line on there, but it's not being very friendly towards me at the moment. I'll try again. It looks to me as though it's going to perhaps come down to there. Is that what you were thinking, Patrick?
Exactly. Yeah.
Looks as though it'll come down to that sort of level and then probably go off to the upside here somewhere. I think we're probably having bandwidth issues here. Come on, go on. There we go. Yeah. That kind of thing. I'll put a resistance line on there and see what it looks like. Not sure if it's going to particularly work very well on this chart. Yeah, around about there. And again, you probably have to bring it down a little bit here on to that sort of level. That's probably where I'd be happier starting it, somewhere around here. And that way you've got a much more clearly defined sort of breakout. Price has jumped up through the breakout level. It probably wants to come back and retest it down here. That would be my sort of gut feeling. That's what happens most of the time, as you've seen on the previous charts. And it looks as though we're heading for a bearish cross on the stochastic. We're still below zero on the tricks indicator, so the real fun and games hasn't started yet. So when that crosses above zero, I'd expect that to take off. So I would, if I'd bought this stock, I'd be holding it. If I was thinking of getting into it, I would wait until it gets into this sort of buy zone down here around about, where are we? About, is that 1 cent? Yeah, it is, isn't it? 0.01, it's 1 cent. So when it gets down to around about 0.01, it's Australian dollars, isn't it? So yeah, that would be my sort of buy zone. Would you agree with that, Patrick?
Yeah, maybe there's like a horizontal that one, like I think at .112 there, that might hold. So yeah, that one there, 12 or 11. But other than that, yeah, this one, that's why guys go on TradingView, get a list, and start filtering those on the ones that are watch. So this one's a watch, and you could even put an alert. Get a system where you could put a lot of alerts, and then so your brain doesn't have to go crazy. So you put an alert for dot 14, 13, 12, and when it gets triggered, then you look at the chart, and then you could see if you want to get in there. But there is a zone, so that it could dip below, right, that horizontal break line.
If the price starts to bounce at this sort of level here around about 14, and if it looks as though the stochastic has come down and is showing signs of leveling out again, then that would be increasing the probability. I often talk about probabilities because the way I approach all of this is balancing up probabilities all of the time. Probability for me at the moment is in favor of a downside move. Just how large that downside move is, we don't yet know. But as you've identified there, Patrick, there's a horizontal support level there. And if the stochastic starts to level off, then it increases the probability that that's as far as it's going to go. And you might want to make a small purchase in that sort of zone there. And then just sit back and wait and see what happens. And if you do get a bullish cross on the stochastic, then I would say that's your buy zone, and you're probably not going to get quite the way back, back down to here. But there is a sort of a pull for price back down to around 0.01 1 cent. I guess that is. So that is really a cheap stock, isn't it? So there's a lot of upside potential. And again, if you check the company out, check the management, check the fundamentals, satisfy yourself that the company is not about to sort of vaporize in front of your eyes, then there's every reason to expect a really good return on this stock. Moving on to LND. What's LND? LND is Landor Resources. Okay, so there was a recent stock split. The looks at this chart, and price is just coming back a little bit. Let's see how far back we can go with the price. See how much history we've got on this chart. Okay. So, again, visually, I'll be looking at this and sort of just before I put any lines on it, trying to visualize where the support and resistance lines are. So this is going back to 2006. So the log chart may be more appropriate. The line chart, it's very, very hard to sort of start analyzing what's going on down here on the line chart. You put it onto a log scale, and you're able to start making some sense of it. So if I just move the chart along a little bit and grab a line, and looks to me as though it starts around there somewhere. And here we go. Have fun and games with the line drawing. There we go. That's quite a nice one. Quite a nice one. It's good, isn't it? Yeah. So you've had
I like this one.
multiple confirmations of the start of the line here, and you've got multiple confirmations in this zone, and you've had another very good reaction. Well, not good if you got in at 28 pounds. This is GB pounds, isn't it? So so 28. Price has backed off down to 20. Looks as though it could be forming some kind of flag in there. And another classic sort of situation to find is just below an important resistance line, and just before the breakout, you get a bullish chart pattern. So shall we just zoom in on that and look at the 1 year time frame? It looks as though the Trix is wanting to turn up on the longer time frames as well. So let's go down to the 1 year chart, and this is the daily 1 year chart. And there's been a stock split here as well. And I must admit, I haven't done a lot of research into the sort of relative effect that different stock splits have on different companies over the years. Be interesting to have a look and just see how much it limits the price.
It's a big rabbit hole. That
it is it? Yeah. It's
in the downtrend. Like I've noticed. Sorry to interrupt, but it depends when it happens, the stock split. And I think you even mentioned to me, sometimes you can have a stock split, I forget reverse or which one, but if you're in a bull trend, it like kind of overrides whatever the management tries to do to the price action. And it's I try to observe like behavior. Sometimes the market adjusts the stock split. Let's say do a stock split to raise the price action by reducing the number of shares in the downtrend. So a few days after the stock splits, the price action goes up. But since you're in a bear trend, it just gets killed anyways. So that stock split, it just gets gobbled up. That short-term positive effect of that stock split they did. And I guess in an uptrend, you could probably do stock splits where they dilute the shares, right? And they could get over, it could have a short-term effect to the downside, and then you just get gobbled up on the uptrend. It's hard to...
I think you're right. I think it depends on the reason for the stock split and what's going on with the individual company. So, it's worth doing a little bit of research if you see a stock split like that. I mean, my methods here are purely chart analysis. What I post on Twitter is all about pattern recognition, chart analysis, and what the chart is suggesting, what the mathematics is suggesting. So, you'll draw if that's I'm not really too happy with that because price has dropped a long way away from the flagpole there, so I don't really think that's valid. But if it was, and price had sort of respected the move up the flagpole a little bit more closely there, then you would have a measured move from the base of the flagpole down at £9, and the top is up around about £28. So you've got £19, and you'd measure £19 from the breakout, and that will give you your measured move to the sort of target. But this is an untidy looking pennant. And by the way, so perhaps I ought to explain. A pennant is, well, exactly what that sort of shape is there. If it's more of this kind of thing, then that's a bullish flag. So that's the difference. And you have symmetrical triangles, descending wedges and ascending wedges, and they have different proportions of bullish breakouts and bearish breakouts. But something that you have to be really wary of is that when you read up on online about how frequently a chart pattern breaks to the upside, if you're looking at a bull flag like that, but you happen to be in a bear market, then the number of occasions when the price drops down out of the supposedly bullish flag is going to be higher than it is in a bull market. So a bull flag in a bull market is going to break to the upside, I don't know, probably 95% of the time. But a bull flag in a bear market will have a greater failure rate. It might only break upwards 60% of the time. So that skews your statistics. So you have to view all of these patterns through the lens of a bull market, exactly, not through the lens of a bear market.
And that's why the fear, when you're in a bull market, that's it. You have to put your bull market baseball cap on, and everything changes. Like Northstar said, the percentage, those patterns are resolved in a different manner. They have the bullish resolutions of these patterns increase when you're in a bull market. So that's why sometimes I'm not giving a lot of bearish targets on anything in the precious metal sector, because I know I have the higher trend, I have the bull market, I have cycle analysis behind me to save my butt. So if ever I do a bullish call and it doesn't pan out, I still have a chance that the overall momentum in the sector is going to resolve the price upwards.
And here's an example of just, you sort of sit with a chart. If you're going to invest, I don't know, $5,000 in something, you need to spend a bit of time, just trying to make sense of what's happening with the chart action. And at the moment, there's since March, like with a lot of the precious metal stocks, there's been a steady sort of price gain. And there's a very clear support line there. I've not quite got it in the right place, but if I actually put it where it should be, it's somewhere in this zone here. We're very close to that support line at the moment. So on the face of it, this is probably going to, you're probably going to get quite a bit of support in here. I'm just looking to see if there's any horizontal support as well. Hard to find it on this time frame. You probably have to go back further, but you'll look for sort of levels where you've got horizontal and sort of diagonal support, and where you get coincidence of support and multiple support coming in at the same level, then that gives you greater confidence that price isn't going to drop much further. It does look at, with these thinly traded stocks, they can often be untidier, if that's a good way of putting it. The price action sort of swings around more than it would do with a a sort of more heavily traded stocks. So that could be some kind of bullish flag. I mean, I don't like putting the line there because you're going right the way through the middle of a candle there. But in general, the price is sort of building out some kind of bullish descending flag pattern. And what's happening here is there's a fight going on between bullish and bearish sort of hands, if you want to put it that way. And this type of chart pattern will tend to resolve to the upside, where you've got this sort of declining pattern sort of approaching an apex like that, particularly in a bull market. So eventually I would expect it to break to the upside. And also, you're starting to see on the indicators here that they've pulled back quite a long way. The MACD there has pulled back quite a long way, just waiting for a little bit of a hint from the technical indicators that there's more of a bullish outlook for this one. So we've seen a protracted pullback, could carry on a little bit further, but I expect to see a bullish resolution in the not too distant future with this. GAU, that's Galliano Gold. Look at the big picture. I always start with a big picture view. You can, if you're looking on smaller time frames, that's fine, but you have to start off, I think anyway, with the big picture view and put the whole thing in context. You need to have an overall context for what's actually happening at the moment. So what have we got here? Interesting one. Not sure if we're going to get a very good resistance line on that one. Tell you what I can see. I'll just take that off for a moment. At least I think I can. See if this works. I'm doing this in real time. I haven't really spent a lot of time looking at these, so you're getting a sort of a view into my crazy mind. Let's have a look.
Yeah, they're scared. Everybody's scared. But it's good because it's like sometimes I see a chart, there's a nice polished finish on the internet, but there's a process to get there. It's not, it doesn't just pop up like that, right? You fiddled around, trial and error. It's and the more you practice, the faster you get to know where like the high probability charts there are. You got to practice and have fun and fiddle around. And it's hard to do on stock charts. I don't know if you guys are on stock charts. I don't know. I shouldn't talk bad about stock charts, but I haven't used stock charts in a while, so I don't know if it's this flexible. But I just like TradingView so much there.
Yeah, I mean, this is looking a little kind of jerky, just because there's a bit of bandwidth issues. I'm over in the UK, Patrick's in Canada, and we're sort of sharing our screens. But you can mess about with these arcs, and the whole point of this is that, again, and I've sort of highlighted this with the dollar and gold over the years, really, is that price action doesn't always have to follow straight lines. You get patterns occurring. I'll get rid of this one here because it's just confusing the picture. Looking at the more recent price action, you can see on here that you can't really deny that there's something going on here. There's, for some reason, price is sort of respecting the arc, respecting the cup pattern, and it's a well documented chart pattern, the cup and famous cup and handle pattern. Although you don't always get a handle, it's not necessary. I'm trying desperately to put a diagonal line on here to see what happens. There you go. So there's a breakout and a back test going on.
Yeah,
and again, you get you get it a lot. This happened with gold. It happened with silver. They both sort of did something similar, and they were respecting this arc pattern. It would have been difficult to identify this arc until this point here, April, because you only had one sort of touch of the arc here. Where would you wouldn't have known that it was going to be an arc, but you had another touch here and another one here. It looks like we're heading for another one, and this is the confluence of support that I was talking about a moment ago. You've got the support line from the diagonal, and you've got the support line from the arc or from the cup. So you've got two reasons why, and also this is good. That's why it's good doing it live. So you can also see a horizontal support line in there as well. The chart is going to let me, if the software is going to let me draw it. try starting the line from this end and see what happens. Okay, I'll try selecting it again.
So yeah, that one's actually we're approaching a low risk entry, right? Because you know where your sell stop's going to be if you ever want to put one. It would be just outside of that arc, and then the thesis would like evaporate if ever. But there's always a danger of a wick, right, on going through the arc, and then by the end of the month closing back.
Yeah, you get sometimes get these shakeout events, don't you, where the price spikes downwards, like it did here actually.
Yeah, that's
in March. Price spiked down, got everybody scanned. Also, it did here as well, back in December 2017. But then price closed back inside the arc.
Yeah. So that's why if you're leveraged, if you're margined, and you can't live through those drawdowns, it's super dangerous. It's a tough compromise, right? You want a bigger position size, but then your sell stops really close, or you want to let it wiggle room. And in a bull market, I favor wiggle room because of the weight of evidence, like Northstar showed, gold's broke out, so all these miners will have a higher chance of resolving upwards. I think you're entitled to let it some wiggle room and not get triggered out too close in case of a smaller time frame drawdown.
Yeah, and you get evidence from elsewhere as well. So when price rose rapidly on the left-hand side of the chart here, you can see that the stochastic indicator remained in the elevated zone for a long period of time. So we're in that elevated zone now. Just because it started to turn down, it doesn't mean, oh my goodness, it's going to come all the way back down here and price is going to crash. We're in a bull market, so what you would expect, and there are no guarantees with any of this, but what you would expect in a bull market is that, and I should say, goodness knows what happened there. I should say that we're working on the assumption that we're in a bull market because of the for all the reasons that we've shown on Twitter. So we're taking that as a sort of a given that we're in a precious metals bull market. So we're not going to start sort of arguing the case sort of why we are or why we're not in a bull market at the moment. But all of the reasons that we think that we are on both mine and Patrick's Twitter feeds. If you're wondering why we're continually sort of making that assumption. Trying to put the stochastic indicator back on there because it just completely disappeared without me asking it to.
Well, that's good for.
Now I've got two of them.
There's a I+1 Academy there that want to know how to add indicators there. So this is how you do it.
Yeah, and you're going to see how I can get rid of them as well now. This software is being there you go. So you just hover over it and you should get a little cross appear and you can get rid of it there like that. So yeah, all of the indicators are up in this menu at the top where it says indicators. You click on it and you get a drop down and you select built-ins. Don't know why it's called built-ins, not very intuitive, but these are all of your indicators and you can just work your way through them and find the ones that you feel comfortable using. You can go online, go on Google, read what each of these indicators are representing and what they mean. But I said this before, probably controversial, but I don't really waste a lot of time trying to get into the weeds about what these indicators are measuring, what they're representing, what they're all trend and momentum and volume indicators. They're all statistical indicators of what's happening with price action. Now, all you need to focus on is the relationship between your indicator of choice and what's happening to the price. And what happens to the price in relation to the indicators is it tends to be similar across all of the different charts that you might be looking at, whether it's gold or silver. If an indicator is moving up, the price moves up. If an indicator comes down, the price comes down. Yes, okay, that's great. But some of them are leading indicators and some of them are trailing indicators. So what you'll find is that sometimes an indicator will give its signal after prices turn down, whereas some of the indicators will give their signal a little bit earlier. So by sort of having multiple indicators, you can sort of start to build up a picture about the most likely price direction, where the probabilities lie. So at the moment, price is coming back and it looks as though it's heading for the apex here. So you're going to be wondering, right, is price going to crash and is it going to keep on going down towards zero, or is it going to hit this apex and then somewhere around this zone here accelerate upwards? Well, one reason I think it's going to accelerate upwards is because we've got all of this support. You've got horizontal support, you've got diagonal support, you've got the arc support. You've also got the fact that we're in a precious metals bull market. You've got the fact that we're not expecting the 8-year cycle low until 2023, so we shouldn't be starting to turn down into that big 8-year cycle low for another year to 18 months. We've got the MACD indicator crossing zero. The TRIX indicator is heading upwards. It's moving up. As the TRIX moves upwards, that's a positive sign. As it heads downwards, it's a negative sign. You can see how price reacts. So we've got, and this is a little bit like the Titanic. I don't mean it's going to sink. I mean it's a big ship and it turns only slowly. So wrong analogy. Okay, it's like the Queen Mary, whatever. It's a big ship. It's like a cruise liner, and so these lines turn over periods of years, not days and weeks. So we've got a long-term trend being suggested by this TRIX indicator. And as it approaches zero and crosses zero, that's a very bullish sign. You can see what happened last time it approached and crossed zero. You got price going up by a factor of 2 or 3. So that one looks good to me. So I would be a holder if I was in this stock. I'd be holding it. If I was wanting to get into it, I would wait perhaps just a little bit longer till it gets down towards 170, that sort of area. But it's at 192 at the moment. So you get a small discount if you wait, but not too much.
Exact. That's why for if you're in doubt, then and you're close to the end of the month, you could just wait for that monthly close, and that really confirms the message that the price action is trying to tell you. So if it closes like that with a nice little wick and a little red body, that could be very bullish.
And someone was asking about Northern Dynasty, our old friend. It's one of those love it or hate it stocks, isn't it? Northern Dynasty. It's probably made a very small number of people quite rich, and a very large number of people tearing their hair out with this stock. It's very political, isn't it? Northern Dynasty. So it could go to zero, or it could sort of go up to $30 or something ridiculous. But looking at the chart, it looks good to me, doesn't it? I mean, it's broken out of a long-term sort of downtrend. It's broken through resistance. It's come back. It came all the way back down to the arc, which I'd previously identified. And there are 2 arcs on here because I was a little bit like Bitcoin, was pondering just where the arc should be. Should it be further to the right? Is it going to get extended out in time? I'm sort of waiting for price here to come further down, and then you'd have to redraw the arc further to the right. But it hasn't done. It's bounced off the arc that I previously identified. Price had come down here and tested the inclining support line, which is fairly common. And so the TRIX indicators turned up. The MACD is now in bullish alignment. So what I mean by that is that the blue line is above the orange line. You probably can't see it very clearly on that chart, but if you look at the numbers on the MACD to the left, the blue number says 0.08 and the orange number says minus 0.01. So 0.08 is above minus 0.01. So that's telling you that the blue line is above the orange line. And as long as that's the case, then that's a good thing. It's not, it's not a guarantee the price is going to go up, but it's a good thing, particularly if the TRIX indicator is heading upwards towards zero, and if it crosses through zero, then that's a very good thing. And stochastic indicator, well, that's backing off at the moment, so that's inconclusive. So overall, I would say that the price has respected the chart patterns that I've had drawn on there for quite a long time now, and if you want to take a gamble, and this is a gamble for political reasons, then this is a low risk entry point. Maybe worth a few $100, because you could have a few $100 turning into several thousand. But I probably wouldn't put more than that into it. It's high risk politically. It's a political football at the moment, and it's got all the ecological questions surrounding it as well. So if you're worried about ecology in that part of the world, then anyway, that's a whole different discussion. Did you want to say anything about that one, Patrick?
Well, no. Well, it's like it's a mix of like you said, like narrative and chart action and all the different narratives. Because who's to say that I don't want to spin a positive story on purpose for NAC, but who's to say? Yeah, maybe their Alaskan thing it doesn't work out, but who knows? Maybe they're working on something else, which could justify that price action. Maybe they're working to buy another mine somewhere. Like it's hard to tell. Like all these narratives, the insiders they know, and whoever knows puts their bets on the chart. They buy, they sell, and that's the ultimate judge, right? The probability. So I know, like we seen the news, it could be the end of the world, but sometimes the end of the world news, and then the chart goes up, and then you don't know why. But is your goal to make money, or is it to be politically correct? You have to choose, right? It's like everybody could go back to that Tesla type thing, right? Everybody says Tesla scrap. But anybody who would have bought Tesla, even at $300-400, would be making money. So at the end of the day, for me, like the ultimate judge is the ARG, the price action, and try to choose the best setup. It's a balancing act.
Well, I think you're right there. And a lot of people say on Twitter that the charts are only sort of limited use because fundamentals are far more important. But I think that's missing the point. The charts are reflecting fundamentals. What do you think it is that's creating the chart? It's the fundamentals. It's not people's, biases and people's views and opinions. It's the reality of fundamentals. It's the reality of people's trading commitments, and really that's all that matters, isn't it? Because that is what is going to determine whether you profit or whether you lose a truckload of money. So that's kind of looking at it backwards from my point of view. If you think that it's just not really valuable because it's not reflecting fundamentals and the fundamentals are more important, that's not true. That's like saying a weather map isn't any use because it's not reflecting reality. Well, we live in an age where weather forecasts are correct 90% of the time. In general terms, when was the last time a hurricane hit the United States and we didn't know it was coming? When was the last time, tornadoes and thunderstorms affected a state and there wasn't any warning at all that there was a likelihood of, tornadoes and thunderstorms? We now live in an age where computer models are able to tell us risk. Go back 20 years, all the computer model could do was tell us what the forecast was in very deterministic terms. It was going to be dry or it was going to be wet. So that was the forecast that we gave. We weren't able to give consideration to likelihood and probability, whereas computer models now run multiple scenarios and give us every possible future outcome and assigns a probability to it effectively. So, we're able to realistically express in a weather forecast what the likelihood is of any given event. We don't sort of stand there and try and hide anything. If there's a possibility, even if it's a small possibility that there's going to be tornadoes or heavy snow or whatever it is, then we're able to discuss that. And I think people tend to understand better now that, there are occasions where, low probability events are talked about and they actually end up happening. Doesn't mean the forecast was wrong. It just means that a low probability event happened. And anybody with a bit of life experience will know that low probability events happen all the time. We shouldn't ignore them, and we shouldn't try and pretend as chart analysts that that we're cleverer than we are. We can't try and pretend that something that's a low probability event is definitely going to happen. People who are saying that gold is going to be going to $20,000, $30,000, with a high degree of certainty. That's just not true. You can't do that at the moment. Yes, if gold goes to $5,000 next year, then I'll be very much on board. Thinking that gold is going to go to $15,000, $20,000 over the next 5 years. It makes that probability much higher, but at the moment you can't say that. Okay, so new gold. This is a good one. I've seen this chart pattern a few times before as well. And it's a descending, expanding wedge tends to break out to the upside, obviously, in a bull market. So it's a call it a bullish chart pattern, but it's not very bullish if you were sort of invested in this stock any time over the last 10 years, is it? But it's ultimately bullish when it breaks out. So it's terms bullish and bearish. Sometimes these chart patterns a bit misleading. You know, yes, it's bullish if you're a buyer as it breaks out. So what can we see on this chart? I'm just having a little look at the indicators here now. I would not be probably a buyer of this stock at the moment. There's no clear indication yet that it's going to go to the top resistance line and break out. It could roll over. The stochastic indicator is quite high at the moment, so it's conducive to the price going up quite nicely. We've got the TRIX indicator rising, which is a good thing, and the MACD is close to crossing zero. Horizontal resistance levels, well, we're probably approaching a zone of resistance here, which if we break through it, I'm just going to put a resistance zone in here rather than a line.
I kind of call those charts sometimes like no man's land, because if you're in, it's a perfect hold until you reach that target. But I would have rather buy it like a little lower, you know, on that diagonal trend line there. There's a beautiful diagonal trend line from 2016 and a half there that goes all the way down.
Yeah. Sort of here, do you mean? Round about here?
Yeah, I think, that's what,
Yeah, okay. I'll put that line on.
See, Northstar could read my mind. All I have to do is describe, and you see how, like, we're seeing kind of the same thing, right? Yeah, there you go. There's something, well, if you drive that way.
That's a channel. Yeah, it's a channel, isn't it? So you've got a descending channel there.
So right there.
It did. Yeah, it did. And if you're unsure about this, by the way, I'll just take these lines off and show you something else that you can do. Because for this to be, I mean, you can see by eye that looked like a descending channel with parallel lines. So when we talk about a channel, the lines need to be parallel. You can select the trend angle. So by going on all these different drawing tools on here, and the most common one to use is this one here for drawing lines. But you'll see it's got a trend angle on there. So what that allows you to do is to put this line on. There you go. So got started to the right place. That was started in the wrong place. Put it back to here. Jumping around like a lunatic. Right, there we go. So I'll just leave that there for a second. Put the bottom one on. Okay. It's a lot harder when you're doing it with people listening and watching. Here we go. See if it works. Yeah. So it's in there somewhere.
There you go.
It's jumping around, isn't it? It's not quite where I want it. But you can see that it's marking an angle on there. I'll get rid of that line because that's just confusing things. Rid of that. Delete. Okay, and we'll try putting this back where it should be. Considerable lag on the charts, making it quite difficult. I'll pull this back to where it needs to be. And you can see the angle. There you go. So we've got a very clear sort of channel in there. 24 degrees on both lines. So it puts a different perspective on it. Price has broken out. We're into the sort of horizontal zone of price rejection, price directional change. This is where Patrick was putting his volume on the side here. You'd have volume defined resistance levels. There'd be one down here that was created by trading action down here. There'd be another sort of zone of volume defined resistance in here, probably one up here and one at the top here. So we're likely to sort of slide, as Patrick puts it, slide up towards this sort of zone here around about $7 from from where we are at the moment, that's more than a doubling in price. So yeah, that puts more of a positive spin on it. So I was a bit more bullish on that than I was at first glance.
And that, guys, is the perfect example to relook at a chart. And even before you do like the buy or the sell, you see at the beginning, I thought we were in no man's land, but actually right now it looks actually not that bad. Maybe it's going to go up a little bit to that higher end of the box at 350 and then retest that descending trend line. But you got to give it different views all the time. The more views you give it to a chart, the more it's going to crystallize in your head. Is this a good low risk, high reward entry? And you could draw as many lines as you want. They're free. They're there. We're so lucky. Back in the days, the old school charters, they had to do their own every week. They had to write the numbers and plot their own charts.
So it looks like a bit of a reverse symmetry going on there. It's from this excuse me, from this level here, it's around about just over $1 Canadian. It's looking as though it wants to go back to around about here, doesn't it? Sort of a reverse symmetry move. You quite often see this where price has been pushed down to a cyclical low. It's taking place in GDX at the moment, for example, and gold, of course, had a reverse symmetry move all the way back to over $1,800. Completed its moved back to the all-time highs by doing exactly this and doing a reverse symmetry, which it doesn't always work out, but it's looking likely in this case. So,
and the tricks is also was also telling you that, right? Because it's slow turning up. It's not even above zero line, because usually the transitions from negative to positive on indicators is very bullish, just a transition. And right now you see that it feels early right now when looking at this chart. It doesn't look
It's interesting because what I was hinting at earlier on is that different stocks behave differently when indicators turn. Some stocks need I really don't know why this is, but some stocks seem to need the TRIX indicator to cross zero before they really take off. But others just need to be trending upwards. And recent evidence on New Gold shows that it's one of those that responds very well to an uptrending TRIX. It doesn't have to be crossing above zero. You can see how price went from just above just above $1 Canadian all the way up to about $12, and it started with the TRIX just going upwards, and the same thing was the case here, although it was just a small move with the TRIX indicator. I wish this would draw the lines when I'm asking it to. There we go. There's a small uptick in the TRIX indicator there, and the price moved from around about 3 up to around about 7 Canadian dollars, so it doubled in price. And the same thing's happening now, and we're starting from a much lower point in a bull market, so there's every reason to be very, very bullish on this, really. You can imagine what might happen to the price if the TRIX indicator follows that sort of path. So yeah, that's a good one. Mega Uranium, somebody was asking for a look at this one. This is one that I've been tracking myself, so I've got a chart here that's already been prepared because I post it quite regularly. Sometimes when you save these charts, they get a little bit distorted, and you have to just adjust them again when you reopen them. It seems to have happened on this one for some reason. So we'll just put the arc back to where it needs to be. If it'll let me. Trying to give up on that. Just move it up a little bit. Okay, just move it up. Okay. So yeah, this is a chart pattern that I like quite a lot. It's got a few things which, from a point of view of someone who's a bit of a geek when it comes to numbers and patterns, it's quite pleasing. So you've got the arc there, which is just been confirmed a couple of times. You've got a descending resistance line, which we've just broken through. You've got a horizontal support line, which has held 1, 2, 3 times. So that puts a floor on the price. And now that we're, I believe, in a commodities bull market, the downside should be limited by the support given by the ARC. Although, as you've just seen with Bitcoin, you can get a spike that sort of goes down outside of the ARC, and sometimes you need to redefine the right-hand hemisphere of the ARC. So it's not impossible that you could have to sort of extend the ARC out here somewhere and reassess, the overall support line. But at the moment, we've had a couple of very good confirmations of where the edge of that arc is likely to be at the moment. So it's looking good. The indicators, well, you've got the stochastic just coming up into the zone where you want it to be if you want price to rocket to the upside. Look what happened back here in 2005. The stochastic got into the high zone and price went from, what was it? It was around about 10 cents up to around about $7. So you got very rich very quickly if you'd had a little bit of money invested in Meg Uranium back in the early part of the decade. And so we've seen a sort of a bear market in uranium. The price has bottomed out. This is your Stan Weinstein phase 1 basing. I think Patrick's our expert on that, aren't you, Patrick, at the moment, having read it again and done the course. But we've got the price just looking as though it might want to come back, retest the support line and the arc, which will be perfectly normal. So it could come back to around about, 10 cents. So although that's a 30%, comes back down to 10 cents. That's it's about 20% drop, isn't it? Something like that. 20-30% drop. So it'll be quite scary, but perfectly normal. And if you look at the upside, I wouldn't be selling the stock. I actually hold this stock myself. And managed to get in quite close to the lows as well. So, I'm quite happy to just sit tight and wait. If you're wanting to get into this stock, maybe worth just waiting a few more weeks to sort of see if price sort of comes back, test the breakout, which it may do. Interesting how the MACD has just been sitting very close to that zero line for so long now. But the blue line is above the orange line. We've got minus 0.004 to minus 0.011. So the blue line is slightly above the orange line, which is a good sign. Tricks is starting to turn up. So yeah, I'm bullish on that stock. So yeah. I can't remember who was asking about Mega Uranium, but I think the uranium sector in general is going to do very well over the next 12, 18 months.
And it's actually good that there's no eyes on it. Like uranium's not sexy. Everybody's like looking at silver right now, or more people looking at silver than uranium. So it's waking up. When you see this is a waking up price action right there. Nice.
It is. I'll just put something else on this chart just to sort of show you what I think is the accumulation zone on this. So that whole zone there is where I would be happy to accumulate this stock. Sorry, move it back down. So that for me is an accumulation zone. It's where there's a battle going on between bulls, bears, and the price is bouncing around, and we're in this bottoming sort of phase of the bear market. We're at the stage at the moment where miners of uranium have been putting a hold on further development, where it's actually cheaper to buy uranium on the spot market than it is to get uranium out of the ground. So that's a very contrarian indicator, if you like. When you get to that sort of situation where mines are closing down and mines are shutting down production because it's not economic to pull the stuff out of the ground, you can't go any lower. If we're going to have green energy, and if we're going to have countries meeting their commitments to green energy over the coming years, then nuclear has to really form a part of that sort of mix without going too deeply into the fundamentals of it. So for a whole variety of reasons, I'm very bullish on uranium and Mega Uranium amongst others, energy fuels, Cameco, uranium participation. There's a whole host of uranium companies that, if you look at the uranium hashtag on Twitter, it'll give you a good sort of heads up on some of the front runners. And some of the likely candidates. So we've got the next one here, which is Sky Gold Corp. Oh, that's an interesting chart, isn't it? It's gone down a long way. Curious to see the MACD rising the whole time that price has been dropping. That's a very positive divergence, you could say. So if you have an indicator moving positively whilst the price action is moving negatively, that's a sort of positive divergence. Price is plummeting downwards, but the indicators going the other way. You can also see on this timescale going back to 2012 that the TRIX indicator has formed a higher low. That's another positive divergence, and it's turning. And if I move this, because it's annoyingly right in the way, you can see that the stochastic indicator is also moving upwards, and it's still at quite a low level. So on this sort of monthly timescale, it's looking quite positive. I'm just going to expand it and see if I can put some lines on the chart.
Yeah, if you want to be early on the stock, this one there, it's starting to shape up. I always like the higher lows on the indicator. When the indicator refuses to go lower and the price action keeps going down, it's very contrarian. It's like washing out. The price action is washing out the weak hands, but there's strength being built in the price action. So yeah, that's like some type of the reasoning there. When I look at indicators, I try to make sense of them, not just their numbers on a scale, but like they're telling you something about what's happening in the price action. So the TRIX is very nice there that it's actually doing that.
It's hard to actually put a resistance line on here because price has just dropped away so quickly that you can't actually draw a straight line on there that the price has come back to retest. It's a horizontal support level in there, isn't there? There's a zone of horizontal support. So I think on this one, what I'd probably be looking for is move that down a little bit further.
See, it almost has to double just to break out of that horizontal breakout line. Where is that? 38 cents?
Interesting, isn't it?
Wow. This stock has been left for dead.
There you go. That kind of works. So you've got... Yeah. And I wonder if that's some kind of...
There's your pivot line.
Seeing if I can get a... Yeah. Again, apologies because the software is being a real pain in the butt. Yeah, so there's a couple of lines there that offer some support and resistance. Well, some support and resistance. I'll move that back down. So it just jumped. Okay, so this lower black line has obviously caused price to be rejected just recently. It looks to me, though, I wonder if I zoom in, whether that might be a bullish flag just below the resistance line. Just have a look at the 1 year time view. And I'll expand the price scale by dragging it upwards. There we go. So that looks like a bullish flag. And I'll just put that on there. Waiting for the software to start actually doing something. Yeah, so there's something going on there, isn't there, just below the breakout line. Move that upwards. That looks interesting. It looks like a flag to me. It's more of a definite candidate as a bull flag.
It's when I look and I see those candles there, and some days like there's no trading, that means it's like there's no volume, right? It's just left for dead. Nobody traded it those days or barely. And then when I start seeing those candles actually looking like nice candles, no gaps, it's like there's interest that's starting to, there's actually probably volume there starting to wake up.
Just doing a little construction on here just so that people watching this can visualize it a bit better. So you see this quite often, you know, price hits a really important resistance level and it backs off and it forms a bullish consolidation pattern. And all that's happening in a way is that it's building the energy that it needs in order to make that breakout. So the purpose of all of this, as far as the stock's concerned, is to consolidate. And then you have a measured move. I wonder if that measured move takes it nicely to that upper line. So we've got 6 there, and that's 22. So that's 16, isn't it? 16 from 22. That's 38. 38.
There
Just
you go.
move this down a little bit.
Lorenz Van Mol on
Yeah.
the chat there want to know what's the estimated price there for Sky Gold or targets, and you just did it.
Yeah, 38. It's interesting that, because that would, bearing in mind that this, I've just drawn this upper line on a bigger scale. So this upper line is probably slightly inaccurate in where I've placed it, but it's in that 38 zone. So you take the start of the flagpole, which is down around 6.06, which is 6 cents, and then it's the top of it's at 22 cents. So that flagpole is 16 cents long, 16 cents high, and then you add 16 cents to the breakout level. So breakout level at 22, so that takes you to 38, which is where the top of, I'll just move the arrow, 38 is there. So it's there or thereabouts in terms of this upper resistance line, which is interesting. So what you're probably, if I was a betting man, which I'm, well, I'm not really, but I suppose in this game you have to be a little bit. But if I was a betting man, I think you'd probably get another sort of consolidation forming here before the far more important breakout.
It's kind of weird, Kevin, because I'm looking at TradingView at the bottom right. It gives you headlines, and it says July 23rd, Eric Sprott announces holdings in Sky Corp. And July 23rd, is that when the price started going up?
Let me have a look.
But he probably bought before, right? He bought at that base. He bought
July 20. Yeah, July 23rd was when price just about hit the top and started consolidating.
Yeah.
So 23rd of June was when it started moving up, and it went up. By a factor of more than 3. So you would have tripled your money from there to there. But it's all about the timing, isn't it? But when you look at the bigger picture, this has got a long way to go, isn't it? Bring the scale down a little bit. So it's just sort of in the tentative early stages of breaking out. Once you start getting that kind of confirmation, and it also looks like a little bit of a false breakout. It also looks like this whole sort of pattern here. It's like a false drop below the support line. It's also a symmetrical move, isn't it? It's a symmetry move back to this sort of 68 level. Probably put an arc on that as well if you're really keen. Get a geometric shape, and these arcs, when you put them on, they're drawn geometrically perfectly for you as well, so you can sort of be sure that they're, you're not cheating. Back across here. Might work, it might not. So put it down a little bit. Extend it sideways. Yeah, that might work. Maybe not. I don't know. It depends how quickly the price action moves. It's worth considering these things, though. You don't always. The other thing to mention is you don't always get the price action touching the bottom of the arc. So a lot of times you get 3 or 4 touches on the left-hand side, and you get 3 or 4 touches on the right-hand side, but nothing down at the bottom to confirm the base. But nonetheless, it still can work to sort of guide the price back up again, probably stretching things a little bit to try and draw it on there. At the moment, it's not defined enough. But there you go. That gives you an idea, and I would say we're heading up towards that sort of 38 level.
Always like clues there to look at. Higher lows. It's always an uptrend, right? Am I doing higher lows even without moving average or any indicators? Those are like right there. I look at that chart. We're doing higher lows. So already you know that trend is gonna help you, even if your timing's off, like in your entry. It's still gonna probably save your butt if you're patient and you don't sell. Let's say you buy too high, and then before it starts pulling back, you still know that pullback should resolve back upwards. It won't be a reversal. It'll just be a simple pullback.
Yeah, I don't know anything about this company at all, but it's already exceeded its all-time high, which was back here in 2011. Horizontal resistance. We broke through, came back tested, and have since gone back down. But I'm just wondering if, rather than having a line on there, and again, I often prefer to work with support and resistance zones, because you've only got one data point here on the left-hand side, that all-time high. It's not ideal for a support or resistance zone to just have one data point. You've got so little data on this chart, it's not really statistically significant. These monthly candles are not going to provide you with very much support or resistance. So price just slices through them. If I put it on the log view, it might help a little bit. Yeah, it's better to, this chart's definitely better on the log view, even though it only goes back. Well, actually, yeah, it goes back far enough. Goes back 10 years, doesn't it? You can probably put a narc on that. Well, maybe.
Yeah, but right now it feels like for entry right now, it feels like in no man's land.
Yeah, there isn't really a diagonal support. Well, the diagonal support line is here, so you could theoretically drop all the way down to 10 cents. We're at 44 at the moment, so if we're going to retest the uptrend line, you've got a long way to drop back down. The main horizontal support zone is in here. This is where you've got more solid, reliable support, which is interesting because it hits the diagonal uptrend line in this sort of zone around here, doesn't it? And quite often when you get this sort of thing, you get it's pointing at a likely target.
And even when you see like a chart, let's say while Kevin's doing this one, you see it's broken out and you don't see a good entry, but notice the basing pattern that led to this incredible breakout, this multi-month breakout. You see it repeats it's always the same, a huge, nice, strong base, breakout above a horizontal breakout line. It's and this one didn't even pull back to the breakout line, right? It broke out in early 2020. Wow, it barely pulled back in March. That thing, it just continued. Wow.
Yeah, just trying to see if I can get a steer as to where the likely direction of this is in the near future. The MACD has leveled off. This is the daily chart on the 1 year. It was the 1 year time. Did ask for a 1 year time view, but I think I've just compressed the scale. Yeah, okay, fair enough. So yeah, the MACD indicator's leveling off. The tricks, it's not clear whether it's going to carry on dropping or not, but the stochastic indicator is showing signs of rising. Let's have a look at the 6 month view, see if that sheds any more light on it. Not particularly, really. I was hoping there might be a more definite sort of suggestion of a move upwards, but looks a bit inconclusive to me there. I think I'd probably hold fire on this one if I was wanting to get into this particular stock. What do you think, Patrick? Yeah, looks as though it's heading down on the 30 mile. This is really looking
are you getting further away from your mic, Kevin?
No, I'm probably talking more quietly. I'm thinking out loud, okay. Right? Yeah, okay. I'm messing with the time frames here. So there we go. There's the 1 year chart, which is probably the most useful one there. And there are some early signs that price might be starting to bottom out, but I don't think I'll be tempted just at the moment to dive into this one. You can put a resistance line on the more recent price action, probably. Let's have a little look. See if it's going to let me do that. Software is being a real pain in the backside. There we go. So there's a short-term resistance line there. So I certainly wouldn't be buying into this one until it shows signs of breaking through the short-term resistance line. So that's up at around 48, 49 cents. Mm-hmm. And at that point, you could see the move back up to sort of, what's that, 73, that sort of zone there. So that'll be a decent profit there if we get the breakout on there.
The pullbacks there, it's huge. Like a 50% Fibonacci retracement on a move is not out of the ordinary.
No, it's quite scary though, isn't it? If you bought anywhere near the recent top on this, but these are sort of, you need to buy and hold and add on weakness. I think at this stage in the precious metals market, trying to jump in and jump out with these things every time the price oscillates, it's a good way of losing all your money quickly, I think, because your timing has to be very good. But there's a expanding descending wedge there. When that breaks out to the upside, that'll be your sign to get in at least short term, and then you'll be looking at the indicators to be starting to turn upwards in the longer term as well, and also looking at the broader gold and silver prices as well to see which direction they're heading in. DSV 7.2%, that went up on Friday.
That's a popular one.
Discovery Metals, yeah. Okay, yeah. Looks like just see what I put on the top here. Forming some sort of consolidation. Hasn't broken out yet. Looks like a pennant of some sort. Going back to the 10th of August, so what's that? It's nearly a month now. It's been building out. Looks like some kind of pennant pattern. And you can see there are previous ones here as well. This isn't the first time it's happened. It's a recurring chart pattern on, and you'll see this with some stocks as well. They form repeating patterns. This isn't me being completely incompetent. This is the software just being really slow. I promise.
This one's respecting a nice trending price action, going up, consolidation sideways, going up, never scaring you, always like, this is what I love there about this. When you don't go up too fast, too high, the drawdowns, they don't play with your emotions that much there. This is just beautiful.
Yeah, so I mean, there's a quite a large number of these consolidation patterns, and some of them are declining trend lines, and some like this one here was a horizontal, formed a horizontal resistance, which became support. In fact, I'm going to extend that one further out to the right, can't I? It goes all the way out here, which supported price, and then it went off up to the upside. So yeah, it's a very nice sort of stair-step pattern, which is forming another bullish consolidation. It looks as though the MACD has turned. Stochastic is in a position where it could quite easily turn upwards and give a bullish cross. So I'll zoom out again, just have another look at the bigger picture. So you can see how things have been moving upwards nicely, and it goes back to 2015. So it's a very blocky-looking chart. But yeah, I'd be bullish on that one. Seems to be following the script. It's broken out and is doing what should happen in the bull market. So it looks good to me. Rio.
Oh yeah, Rio. A lot of followers there. They want to very bullish on Rio.
For it to load up, this just shows you how slow the software is being at the moment. Okay, let's get the full picture. Oh, it's a good example of a stock that doesn't want to stop, isn't it? You've got the drop here back in 2008 in the 8-year cycle low, gold's 8-year cycle low. Next one of those is due in 2023, by the way, so we're watching out for that one. But the next important point here is the all-time high breakout, isn't it? Trend line. The trend line on here, so you got that. That's the all-time. Okay. It's the all-time monthly closing high. Round about there, anyway. Bring it down a tiny bit, maybe. Try to bring it down a tiny bit, and the line just jumps. But you get the idea. So that's the sort of all-time high breakout line that we're going to be looking at.
That's Rio Tinto. Wasn't it Rio.V they wanted? Or am I mistaken?
Could be. I don't know.
Yeah, I think
there are a few requests for Rio. So
for Rio Tinto,
try Rio.V.
Yeah, because Rio Tinto is like just I think aluminum, no?
Just have a look. Okay, so you're looking at
this one. Yeah, Rio 2 Limited.
That's the one that can run listed on the Canadian TSX.
Yeah.
Let's have a look.
There you go.
Okay. Talk about a gap. that's one hell of a gap. Okay, so here we go. We'll look at that as a breakout there. Let's look at the longer term picture. See what happens if we put a resistance line on from here down to here. It's going to let me do it. This is where you have to zoom in. This is where you need to put your glasses on. Let me just expand the price scale to make sure we're getting this right. Bring the chart down. Okay, now you can see where the candles are. Again, the software is being really, really difficult to use. Let's see if the chart will move down. There we go. Okay, so that needs to be probably resting a little bit lower down, about there. This needs to go up just a little bit. It's a breakout back test, isn't it?
Yeah. Yeah. It looks nice.
The line just moved after I put it in the perfect position. Zoom in a little bit more if you can.
And sometimes when you're not sure, then after that you look at the, let's say MACD, it's crossing over. So I think it's going to do a bullish. Oh, is it bullish? Or is that green line? But the TRIX is starting to turn upwards on the zero line. The stock is in the bull power zone.
Yeah, the MACD there is in bullish alignment. The blue line's above the above the orange line. It's in positive territory, 0.05. The TRIX is turning up, and the stock is where you need it to be. So that's a buy, hold, and add on any weakness, but it looks ready to explode to the upside. That one, doesn't it? It also looks like that's a. Just try and see the whole chart there for a moment. See what else I can see. Yeah. It's one hell of a drop down there, wasn't it?
Would have been fun to buy it to load up at 1 penny, but there's no way that chart looks it looks close to bankruptcy at 1 penny. That one,
doesn't it? Yeah. You'd have to be very brave to pull the trigger at that point. But cranky, you'd have made a fortune, wouldn't you?
Wow.
Yeah. It's Yeah, that was very close to bankruptcy. It's about as close to zero as you could get it. But you had the positive divergence here again. The MACD is rising. It's telling you something, isn't it?
Yeah.
Yeah. So yeah, that's definitely definitely a buy. Definitely a buy. Okay, so how far down this list have we got now?
You've done everything, no?
There's
I
probably a
know
couple on there, but there's a few on there still. UFO. I don't think we've done alien. Whoops, alien metals. I think that is, isn't it? Yeah.
I know a few people have mentioned the UFO. Look,
Yeah,
we're an hour 45 minutes in, Kevin.
Yeah, it's been
Yeah,
quite
did you have a
long,
hard
quite long.
stop or?
About another 10, 15 minutes.
Okay.
There you go. There's alien metals. So I'll quickly do this one for you. Again, you've got positive divergence on the MACD. The indicator's rising. The TRIX is rising. Price has been falling. All of these indicators are going up as price is coming down. So it's a positive divergence between the indicator and the price. And let's have a look, see what happens when we try to put a resistance line on here. So the resistance line is quite a long way above current price, but everything's looking pretty promising to me for this stock. Got support level clearly defined there. Don't see any arc formation on that, but I certainly see a horizontal resistance level in here, which is going to be important as well. If I can get the software to draw the line. Try it again. It's not wanting to do it. It's quite annoying. But you can see somewhere around about 74, 75 cents. Try one more time.
And the stock is exploding. When you go from the bear to the bull zone, before you get to the bull power zone on the stock on the monthly chart, there's usually a big price expansion that happens, and it just did it right now in the past 2-3 months.
Yeah, that area there between where the current price is, right between sort of 70 cents and it's up to sort of $1.13, that sort of area, that sort of zone, you'll have volume defined resistance in there, and the breakthrough of that zone is going to take you up rapidly, isn't it? I mean, you've got this huge gap. You got a gap in here.
Whoa, what is that? $22? Wow.
Yeah, well, the gap is around about $4 or $5. You hit the gap at $4 or thereabouts, and the top of the gap is at $8, $9, over $8. So potential rapid move, I would say, coming up if we can clear this horizontal resistance zone, which might just take a few weeks. Then that not only would that take us through the gap, it would take us through the resistance line as well. So incredibly bullish prospects, actually, looking at this. I'd be very bullish on this chart. That's taking it from less than $1 to more than $8.
There's a 10 bagger we're looking for.
There you go. Yeah, alien metals. Heard it here first. Probably not, actually. I know others have been watching this one. So there's a few others on the list there. Comstock was one that got very interesting just recently with a move of about 100% or something ridiculous. I've actually got a little bit of this stock, and I just have to love this chart, really. How amazing is that, really? I mean, that's just, talk about history repeating, learning from history. What happened last time? What's happening now? Where's the horizontal resistance? What are the indicators doing? It's all there for you. It's just waiting for a huge upside explosion. The price has been very volatile just recently. It moved from $1 up to $2 and then back down again. It's wanting to break out rapidly to the upside. You can see what happened back here in 2007. Price just accelerated away to the upside. When this goes, it's it's going to go, and you won't be able to get back in. It'll just accelerate away to the upside. That's my view anyway. I wouldn't with all of these. They're fairly thinly traded. They're riskier than, I don't know, Barrick, Yamana, Sibanye, the bigger companies, but the reward is potentially much bigger. So my advice really not to put any huge amount of money into any one of these suggestions, but to have a to have a go with it. A lot of them are poised to sort of unless you're a gambling, if you're a gambling person, great, take a big risk. But I'm not, and I probably wouldn't. I'm not a financial advisor, but I wouldn't tend to recommend taking huge risks. Putting large amounts of money into any of these companies is going to be a big risk, because they can, it's possible they can vaporize overnight. But it's much less likely now that we're in a precious metals bull market. So, this is a low risk time, in terms of seeing all your money sort of vanish in a puff of smoke. So, do your own due diligence, draw your own charts, learn from what me and Patrick have been saying, and good luck to everybody.
Exactly. You have to, because just like listening to Northstar and I doing the charts, but what you should grab is not just like the price targets and what's going to explode. That's cool, but trying to use part of what we say to experiment yourself. I know sometimes we don't have time, and it's good to delegate, but it empowers you if you're able to dive and understand, and you could find your own charts there that are ready to explode. That's why the power of Twitter is cool, because there's so many stocks right now. It's to check at the beginning of a bull market. It's easy because you only check gold, you check silver, you check GDX, those big ones. But once all those are starting to break out, if you want like leverage gains, you have to go in the minors, the small caps. But there's so many. And with time, with people doing charts and sharing them at a glance, like let's say a Northstar chart, it's great because you look at a glance and all the homework's been done, right? It explains everything, why he thinks it's bullish. But the more people are able to do like Northstar, the more we're gonna all choose A++ setups, and instead of buying stocks that fizzle out based on a news release, So
absolutely, and just to sort of, if we're sort of wrapping this up in the next few minutes, just to bear in mind the big picture. Gold and silver, they've had a huge basing formation taking place at a cyclical low. You can see the cyclical low here at 2016. The next 8-year cycle low, late 2023. So this was late 2015, early 2016. So sometime sort of late 2023, when we're expecting to see price bottoming. So we're going to start turning down at some point into this 8-year cycle low. We've probably got another 12 to possibly 24 months next year and the year after of price rising for the gold and silver markets. Depends how right translated the cycle turns out to be, but we're in a bull market, so it'll be a right translated cycle. So that's the big picture. All these sort of daily, weekly oscillations, you have to view them. The recent price action, although price has backed off a couple $100, you can't even see it on this chart. It's such a small amount. We've come all the way up here from 1,050, 1,200, 1,400, 1,600, 1,800. We're now, we've hit 2,000, heading back down. Even if we head back down to 1,700 or 1,800, the miners are going to absolutely love these gold prices and silver prices. If silver pulls back to $22 and gold to $1,800, which I think is quite possible, even at those levels, gold and silver miners are in the money, and investors are starting to wake up to that. So, this is going to be, good fun over the next few years. It's going to be great. So, hopefully, me and Patrick will be sort of here to chart our way through it.
Yeah. I can't add anything more than that. It's a bull market, and try to choose A++ setups. I know that the bull market could save your butt even on stock that shouldn't be going up, but if you choose the best of the best, then you'll just increase your success rate, and that's all we want, right? We just want to be on the right side of the trade, the one that give the most profits and minimum drawdowns.
And one other thing, a real good tip is to, if you can, follow some of the guys who do cycle analysis. Norvast and Grady on Twitter are very, very good. Grady is GRADDHY. You can search him on Twitter if you're not already following him. He combines chart analysis with cycles analysis, and Norvast as well, although interpreting what he's trying to sort of say isn't easy if you're fairly new to this, but it gives valuable insight into when we're going to see these sort of consolidation periods, and you can see exactly where I've got this pullback zone. And I did this chart quite a long time ago, by the way. I've just been sort of following it, and very predictably, price broke through, and very, very predictably, it's coming back into the pullback zone. I don't really want to try and define exactly where price is going to stop, because it could be anywhere between, by my reckoning, sort of $1,750 and sort of $1,850 or $1,900. It's been bouncing around at the 1923 level, which is the previous all-time high. But I think it probably will drop down below that towards 1,800 before this consolidation is finished. If it doesn't, great, I'll be happy. But I think it probably will. So you need to be mentally prepared for that. I think we're going to see price moving upwards in the next couple of weeks, but I don't think we're done yet. I think after prices moved upwards for the next couple of weeks, I think it probably will pull back further into a cyclical decline that will complete the unfinished business with $1,800. At that point, I'd be very, very bullish. And we can, look at clear skies ahead all the way up to probably somewhere not too far away from $3,000.
Yeah. And that's why sometimes I'm, since I've been Northstar has shown me like those cycles, and that's why when I look at the U.S. stock market, I'm able to. That's why I don't think we're going to crash. Like right now, there's a VIX spike and everybody's scared. But in the weight of evidence, if this cycle is to pan out, that gold is, if the markets crash, we're going to have another liquidity event probably in gold. So I think that's going to coincide with this cycle. So when gold starts declining into its mid-cycle low, that's probably also at the same time that the U.S. market's going to have a severe correction where there's going to be a reason for people to liquidate their gold. But after that, we know the recipe. I know it's the response by central banks or whatever to relaunch everything, the debasement of the fiat currency, that's going to relaunch in the nominal values U.S. equities, but it's also going to relaunch gold upwards for its end of cycle, end of the decade super highs. So everything matches pretty much together. Everything's probably going to go up in nominal values, except we know that if you divide gold or the SPX or the Dow by gold, gold will outperform from now on until the end of the decade. It already started, even silver, so everything could go up. But if you want to have better returns, gold will give you that versus, or silver will give you that versus, or probably most commodities going forward are going to give you that versus U.S. equities. So that's why, like when people start catching on, I have a chart there that you do the Dow to silver ratio. If fund managers would see that, I think they would start pouring that capital inside because they'll get better returns.
Yeah, absolutely. And the silver big picture chart going back for the last 50 years puts all of this into perspective. I mean, look, the TRIX indicator is barely getting back above zero. The MACD has a long way to go before we get, towards what we might think is the sort of peak in the price for silver. Huge cup formation. You notice the price broke down through the edge of the arc, which is what is quite common when you're starting to form a handle pattern. So if this is a handle to this cup, then the price projects upwards to, this cup is nearly $50 deep, isn't it? It's sort of $3 at the bottom, and it's spiked up to $50. So I don't know, call it $45. You add $45 to a breakout here, you're talking about close to $100, $90. So that's your first target anyway, just from the depth of this cup. I suspect we'll get to $35 fairly quickly once this consolidation correction's over, and then up to around about $60 before pulling back into the 8-year cycle lows. So my expectation either next year or the year after, probably the year after, will be $60. But just how high we get next year and the year after helps to sort of refine our roadmap as we go forwards through the next sort of 5-6 years. So it's really not possible yet to say whether we're going to get to $100 or $300 silver. We need to have the perspective that's provided by the high that we reach before the 8-year cycle drop. Once you've got that perspective, it starts to give you the scale that you need to the whole pattern. And once, if this only gets up to $50 and then pulls back, that's very different to if it gets up to $100 and then pulls back.
Exactly.
So,
Exactly.
we just have to be patient.
Yeah. So that's it. That fib retracement, just like in 2008, let's say we do a 30 or 50% retracement. Well, if we're at 100, then we're not going to go lower than 50. If we're at 70, we're going to go down to 35. So you got to let this play out, guys. You don't fear. Just wait. You're in a bull trend. You're above an inclining 1-year moving average, and let it play out, guys. Look at the MACD. I'm always fascinated when I see that MACD just starting to go up. And somebody's asking for the tricks. I know it's moving averages, right? That it's a combination of moving averages, divergence. Is that what the tricks is?
Yes, it's a triple exponential. It's a calculation of the relative difference of the moving averages.
Yeah. And look at that, even the stock. I don't want to drag it on, but if you could draw a trend line from the 2011 top on the stock going down to that 2016 high and now to that 2019 high, we're having already, like, it's just silver just broke out of its pattern on the stock. It's just insane. It's
yeah. I know the tricks indicator is defined as sort of being it's kind of like overbought and oversold. It's often referred to as being oversold when it's down at the bottom here and overbought when it's at the top. But how do you define how low it needs to go before it's oversold and how high it needs to go before it's overbought? Who's to say that it's not going to move up to 800 during the next bull market? Okay, so it went up to whatever it was, 400 back in the 80s, but why can't it go to 600, 700, 800? You can see, that it sort of dropped to, I don't know, minus 100, something like that. Why didn't, and this time it went further, it went down to minus 150. So there's no reason to think that it can't go higher up. So just, using the simple definition as overbought and oversold doesn't really work in my mind. It's more of a momentum. It shows you the momentum. It shows you the buying pressure is in an upwards direction. To me, it's more of a momentum indicator, and the higher you get, the greater the momentum in terms of the buying and the price appreciation. So that's the way I interpret it, and it oscillates around the zero line. This zero line is quite important because when it crosses the zero line, it's taken as a sort of a bullish indicator. But you have to have that in the overall backdrop of where we are in the bull and bear market. That point there in 94, you'd be wrong to assume that was a particularly bullish indicator because it's just carving out a huge basing formation. The price is just bouncing around, within that basing formation. So you need to have a backdrop of where you are in the cycles.
All right, I think that's a great way to close it up, Kevin.
Yeah, well, I hope everyone listening has kind of gained something from what we've been doing, and it's not easy doing it sort of live when the software is being a little bit playing up a little bit, but hopefully everyone sort of gained a little bit of an insight as to just how you can start doing these chart formations yourself and have a go. It's you'd be surprised. It's good fun. You learn a few things as you go along the way, and it's good to have a bit of a control of your own sort of trading decisions. Yeah,
I totally agree.
Yeah, and we'll keep posting our our charts, and maybe next time we do one of these, we'll try and limit people to one or two suggestions because we had hundreds of them, but hopefully we got through quite a few of them for you.
Yeah, it's we need an army. We need a Twitter army of people doing these charts to be able to cover everything. It's crazy.
We do. We'll do our best though.
All right, guys. Okay, see you later. Ciao, Kevin. Ciao, guys.
Cheers. Bye-bye, everybody. Bye-bye.